Alright, today I want to go over the VWAP, what it is, how you should use it, and why you should use it. Now let's define what the VWAP is. What is the volume weighted average price? If we look on Investopedia.com, we see that the VWAP is the volume weighted average price. Now what does that mean? VWAP is calculated by adding up the dollars traded for every transaction, price multiplied by number of shares traded, and then dividing by the total shares traded for the day. Now let's go a little bit deeper. Why is the volume weighted average price important for traders and analysis? It's an important tool that traders use to gauge whether a stock was bought or sold at a good price. Typically, traders and analysts use the standard VWAP, which calculates the price based on all of the orders for the trading day. However, some prefer to use multiple time frames for the VWAP. This is very important. Traders and analysts use the VWAP to eliminate the noise that occurs throughout the day so they can gauge what prices buyers and sellers are really trading at on the stock or the market. So there can be a lot of volatility on certain stocks throughout the day, a lot more buying at certain times and a lot more selling at certain times, or if a stock gets overextended at a certain period of time. So the VWAP just takes the average of the day, eliminating the noise that occurs throughout the day. So you can really gauge what price buyers and sellers are trading this stock at. It gives traders insight into how a stock trades for that day and determines, for some, a good price at which to buy or sell. Now you will notice on the VWAP that this indicator, when the stock comes down to this level, there's going to be a lot more buying pressure or selling pressure depending on if the price is below the VWAP or above the VWAP. Now we're going to take a look at a few examples of this, and I'm going to show you in Thinkorswim how to add the VWAP to your chart. So the VWAP is this purple line right here. It's the only indicator I use on the 1 minute time frame. I use the 13 EMA, 50 and 200 day moving averages on the daily chart on a different monitor. On this 1 minute candle frame, you will want to use this VWAP indicator. I know some people who do not use it, but there are so many traders out there that use this, and that's why it's important. You can look in Thinkorswim and look at all the different studies on here. I mean, there's hundreds. There are so many studies that you can add to your chart, but it does not matter how many studies you add to your chart. You want to add the ones that people are looking at, and the VWAP is what a lot of people look at. So how you add it on Thinkorswim is you'll go to Studies, Edit Study, and then you just type in VWAP in the corner and double click the VWAP and it'll add to your chart. It's going to come with a couple more lines added to the VWAP. There'll be an upper band and a lower band, 2 deviations from the VWAP. Now I have removed these from my chart because I have not seen them to be very effective, but you can include them if you'd like. All it does is just give you a little bit more depth, so rather than the actual average, it'll give you a little bit more up and down from that point. So now that we've defined the VWAP and I've showed you how to include it in your chart, I want to show you why you need to have this in your 1 minute time frame. I want to look at a few charts of this so you can understand how other traders are using this. Now the VWAP on RDVT, you can see the buying pressure comes in almost nearly every single time this stock comes down to the VWAP. This is an intraday technical indicator that so many traders use, and you need to add it to your chart as well. We come down once, it bounces off. Twice, bounces off. 3 times. 4, 5, 6, 7, 8, 9, 10, 11. I mean, dozens of times it bounces off the VWAP throughout the day. There's a lot of buyers that place limit orders at these points. This is a great intraday technical indicator to use because it basically sets your risk for you. If you buy a stock on the bounce of the VWAP, now you know, okay, my exit is if it breaks the VWAP. And you know that that's what we're all about in everyday trading. We're about predefining your risk. See, most people are so focused on how much they can make off this trade that they're not even thinking about how much am I willing to lose from this trade. And that's why this VWAP indicator is a great tool for you to use, because it's a visual indicator to you on the strength or weakness of the stock. So it lets you know when you should be buying, when you should be selling, and when you're in the heat of the moment and you're like a deer in headlights when the stock is crashing, you can just see, okay, if it breaks below the purple line, I'm out. And that's it. It's a very easy visual indicator for you. So that's another good purpose of it as well. Because on RDVT, we see that this stock had strength above the VWAP all day. There was buyers always coming in around the VWAP, and if it broke below it, then the stock would be selling off because of weakness. Let's look at another example. BLNK on Friday. This is a stock that I knew had heavy short interest on it because it's been running for a few days off of a partnership with Whole Foods, which you know Whole Foods is owned by Amazon, so it was a big deal. This stock was only like $1 or $2 a week ago. And there was a lot of short interest on this play, trying to bring this penny stock back down. Now here it is when it's priced at $2. And you can see the stock is below the VWAP and there's a lot of weakness on it. And then all of a sudden, volume out of nowhere picks up and it breaks the VWAP and just takes off and it holds straight above it. And shorts got squeezed big time on this play. See, if you were a short and you were shorting this, your cover would be if the stock broke back above the VWAP. But I could see on Twitter a lot of shorts even losing $60,000, $70,000, $80,000 because they could not cover their positions. They just added to their positions thinking, okay, well, it's going to come back down eventually. You have to predefine your risk before you ever enter a trade. I want to nail that into your head. Predefine your risk, cover your position, or sell your position if it breaks above or below the VWAP. And so on BLNK, I did not make very much at all on this because I'm on a cash account and didn't have enough funds to trade this price stock. But I wanted to show you a great example of this VWAP break. And from seeing this happen on BLNK a week ago, knowing that shorts got squeezed a week ago, off of a very similar pattern, we opened up and dropped at the start of the day and then started consolidating. And then we just broke up through it and a lot of buys started coming in. And then a lot of shorts had to cover their positions and it made an explosive move, especially on a lower float stock. So we talked about what the VWAP indicator is, why you should use it, and how to add it to your charts. I didn't use this indicator for a long time until I added it, and then I just saw how the candlesticks reacted to it. It is 100% used by the majority of traders, and that's why you need to add it to your chart.